Filtronic is a small British company quietly sitting at the heart of one of the most exciting technological races of our generation. Satellites multiplying in orbit, data flying across continents at speeds that would have seemed impossible a decade ago. And with SpaceX heading toward one of the most anticipated IPOs in history on June 12th, this small cap might be about to get a lot of attention it's never had before. So what does Filtronic actually do? They build the radio frequency hardware that sits at the heart of next-generation space communications, things like transceivers, solid-state amplifiers, and filters. But their crown jewel right now is a gallium nitride amplifier that Starlink's ground stations depend on. Starlink operates in an incredibly demanding frequency band between 71 and 86 GHz, where most hardware simply can't keep up. Filtronic's amplifiers deliver 6 times the output of older technology, unlocking the multi-gigabit speeds that make Starlink genuinely competitive. SpaceX could have tried to build this themselves. They love vertical integration, but instead they went deep on partnership. Deep enough that they've offered Filtronic up to 15% in share warrants tied to volume commitments. That's not a casual vendor relationship, that's a strategic bet. Now there's a real concern here around customer concentration. About 70% of Filtronic's revenue comes from SpaceX. That's a number that should make any investor pause. Elon Musk's companies are famously aggressive at squeezing supplier margins, and if SpaceX ever decided to learn to build these amplifiers in-house, Filtronic would be in trouble. The company's response to this? They're actively bringing in 4 major new space customers in 2026, and their amplifiers are designed to work across all satellite orbit types, low Earth orbit, geostationary, you name it. That flexibility matters when the broader satellite industry is projected to grow 6-fold by 2030. The financials are genuinely surprising for a company this size. Filtronic has been profitable every single year for the past 5 years. Revenue has grown from around $20 million in 2021 to $75 million in 2025. Net margins sit around 24%, which is extraordinary for a hardware manufacturer. They've built a new factory already capacitized for volumes 4 times what they're currently doing. They're not just hoping to grow, they've physically prepared for it. Running a bull case to 2030, if revenue grows at 30% annually, they reach around $278 million. If margins expand modestly to 30% given the operating leverage that comes with scale, and the market assigns a PE around 37, reasonable for a high-growth, high-margin business, you arrive at a market cap around $3.1 billion, or roughly $12 a share compared to where it trades today. But here's the catch, and it's a real one. The stock has already surged over 200% in the last year and more than 2,600% over 5 years. It currently trades around 15 times sales and 70 times earnings. The narrative around space infrastructure is powerful, but those multiples assume flawless execution for years. Analyst consensus targets sit around $3.80, meaningfully below the current price. Technically, the stock is trading roughly 100% above its 200-day moving average. With the MACD recently flipping negative, it needs to breathe. The management team, under CEO Nat Edinong, has clearly steered this company in the right direction, pivoting away from slower telecom work and into the high-growth space economy. The secular tailwinds are very strong. The SpaceX IPO alone could bring a wave of new investors who discover Filtronic for the first time. The total addressable market sits at around $160 billion for satellite communications broadly, with Filtronic's specific opportunity around $4.5 billion over 5 years. They've captured less than 10% of that. Plenty of runway, but it is a niche. So the final verdict? This is a phenomenal, profitable, technologically differentiated small cap with real moats and real tailwinds, but the price has run ahead of the story. The entry point worth watching is around $3.70, near the 50-day moving average and the lower Bollinger Band. At that level, the $12 price target for 2030 represents a genuine 3 times opportunity. Until then, it's a company worth watching closely, not buying impulsively. The space economy is only getting bigger, and Filtronic is one of the most interesting pick-and-shovel plays within it.